Welcome back to the Wall Street Podcast. Today, we're diving deep into the Wall Street Journal from August 6th, 2025. We'll be looking at some really critical developments, things like U.S. economic data integrity, shifts in monetary policy influence, tech strategies, and what's happening in the healthcare market.
And how they all connect, which isn't always immediately obvious.
Exactly. So, the journal kicked off with some pretty big moves on the economic policy front. We had that July jobs report coming in weak, only 73,000 jobs added.
Right, and those big downward revisions for May and June, too, 258,000 combined. That wasn't small.
No, and then right after, the BLS commissioner, Erica McIntarfer, was fired.
Which immediately raises eyebrows, of course.
And on top of that, Fed Governor Adriana Kugler resigned unexpectedly.
Creating an earlier opening for a presidential appointment.
Yeah.
Potentially someone favoring rate cuts, looking ahead. Names like Hassett and Warsh are being mentioned as possible Powell successors down the line.
So this convergence, especially the BLS firing after a weak report, it really feeds into this perception of, well, politicizing economic data, doesn't it? How does that actually hit the markets?
Well, it's significant. Look, concerns about data integrity can directly impact things like the $2.1 trillion TIPS market, Treasury inflation-protected securities. And it can influence the dollar's value, too. Basically, if investors worry the data isn't, let's say, completely objective.
They might demand a higher premium on U.S. debt.
Exactly. And you might see them start relying more on private data sources.
Okay, but relying more on private data, what's the implication there? I mean, do they offer the same kind of insight?
That's the catch, isn't it? Private sources might be quicker, perhaps, but they just don't have the historical depth or the standardized approach of government data. So it could mean a shift in where market confidence lies, potentially giving us a less clear picture of the economy overall.
Right. Okay, shifting gears a bit, the journal also highlighted some key corporate strategies. Palantir, for instance. They seem to be continuing their strong run,
Yeah,
driven by AI and government contracts.
absolutely. They've really cemented their position in Washington and as a, S&P 500 player.
At the same time, you've got the healthcare sector undergoing its own big changes.
Yeah, major insurers like Humana,
Yeah.
CVS Health, they're strategically cutting back on Medicare Advantage benefits.
Yeah.
They're exiting markets that aren't profitable, really focusing on the bottom line because medical costs are rising and government payments have been revised.
Let's stick with Palantir for a second. Their growth model, engaging in geopolitical issues, the CEO's assertive style. What does that signal for other tech firms wanting that kind of influence?
It's a fascinating model. It really emphasizes leveraging Washington connections, but also this rapid response capability.
Yeah.
They talk about deploying solutions in, 24 to 36 hours?
That's incredibly fast.
It is. And the leadership style, confronting critics, even the media. It's not the typical corporate playbook. It suggests maybe more aggressive path for companies in these high-stakes tech and government sectors.
So it's as much about wielding influence and maybe being confrontational as it is about the tech itself.
It seems to be a core part of their strategy, yes. It's quite distinct.
Okay, and back to healthcare then. What are the broader implications for people, for beneficiaries, as these big insurers pull back on Medicare Advantage?
Well, for beneficiaries, it likely means fewer benefit options, or perhaps changes to their existing plans next year. This move by Humana, CVS, and even United Health Group planning pullbacks for 2026. It signals a clear shift away from just growing market share at all costs in Medicare Advantage.
So the focus is now squarely on profitability.
Precisely. And Wall Street seems to approve of this shift, rewarding companies that prioritize margins in these government programs. The era of aggressive expansion seems to be, well, pausing at least.
And the journal really brought this home, connecting these high-level shifts to daily life. They reported that millions of U.S. kids are in households basically just scraping by, nearly half below the lower middle-class threshold.
Right, and the striking part was the example showing how even a small wage increase can actually make a family worse off.
How does that happen? It seems counterintuitive.
It's often called the cliff effect. You earn a little more, cross an income line for a program like, say, food benefits, and suddenly you lose aid worth more than the raise you got. It highlights a real challenge in how some federal aid is structured. It can inadvertently discourage small income gains, trapping families.
So earning more doesn't always mean getting ahead.
Not always, especially when you factor in inflation and these benefit cliffs. It shows how economic policies and corporate strategies have these very direct, sometimes paradoxical impacts on financial stability for everyday people.
Understanding these connections, data perception, corporate pivots, the real-world impact, it's really essential for navigating what's happening today.
Absolutely. It forces you to think about whether our current systems are truly set up to help people advance, or if there are unintentional traps built in.
A critical question indeed. That's all the time we have for this deep dive.